Good morning, you're watching One News Now Markets. I'm Dani Laurel. Now, before we delve into the equity space, here are the top stories of the hour. The Senate has ratified the Regional Comprehensive Economic Partnership, or the RCEP, with more than two-thirds of the chamber voting in favor of that trade deal. Now, exactly 20 senators voted to ratify the RCEP, while one voted against and another abstained. The RCEP is a free trade deal between 10 ASEAN member countries as well as Australia, China, New Zealand, Japan, and South Korea, which would lower or remove tariffs for select products. Senate President Mig Zubiri welcomed the ratification of the RCEP, saying that the Philippines cannot put off joining the deal any longer.
We don't join RCEP, definitely we will not be able to expand the exports. We will not have a hard time convincing these people to come in and do foreign direct investment in our country.
Senator Amy Marcos, meanwhile, abstained from voting for its ratification. The senator says lawmakers should have considered the livelihood of local farmers and producers first.
Ang aking paninindigan hindi bilang kapatid sa kapangyarihan, kundi bilang anak ng legasiya ng aking ama, na laging unahin ang maliliit, ang mga nagsasaka ng lupa at ng lahat ng mga nangangailangan. Pahintulutan ninyo akong hindi lumahok sa botohang ito, di dahil umiiwas sa katungkulan, kundi hanggang sa panahong ito, bigo pa rin ang nakararami sa bukid.
On the other hand, Senator Risa Hontiveros, the lone senator who opposed the RCEP, raises doubts that the deal would benefit the country. Hontiveros also remains unconvinced that the deal would not pose security and health risks for Filipinos.
The calculations for me are simple, Mr. President. Dapa na po ang ating agrikultura. Hindi pa tayo nakakaahon sa pandemya. This is not the time for RCEP.
Now, key government officials have welcomed the Senate's ratification of the Regional Comprehensive Economic Partnership, or that RCEP. NEDA Secretary Arsenio Balisacan says the move would boost the country's position as an ideal investment hub in the ASEAN region. Now, for Finance Chief Ben Diokno, RCEP is key to a more open and transparent trade and to an expanded market access of the country. House Speaker Martin Romualdez believes that it could attract more investors, create more jobs, and curb unemployment and poverty rates. Now, will the ratification of the RCEP have any impact on the equity space? Here to chime in about that and more, we have with us Rustine Mercado, Head of Research of China Bank Securities. Good morning, Rustine.
Hi, good morning. Thanks for having me, Dan.
Rustine, opening the markets this morning, at least in our local index, we see us sliding a touch to 6,700 levels still. Any impact of RCEP on stocks? Is there going to be immediate impact here on specific sectors, maybe when it comes to trade like food and the agriculture space?
I think we had hopes that it would have reinforced the bounce from yesterday, right? But of course, you saw that weakness in offshore markets yesterday night, and that's kind of driving sentiment at this point. In terms of in terms of industries, I think the best one to benefit could be manufacturing, given the market access that they'll be getting for those countries that we don't have free trade agreements with. So that should benefit them, I think, the most.
All right, so taking a look at manufacturing as well, I'll try and pull that out for you. But give us an idea of why this would be benefiting the manufacturing space, especially from the export side. There are concerns, and we did say that earlier on, that because of the lower tariffs, we might actually be struggling here in the Philippines. Give us an idea of which types of stocks or companies should be benefiting from this instead.
I think for manufacturing, food manufacturers will have access to more markets, right? So that's going to be lowering the cost for exports for them. In general, there's improved market access for not just goods and but also services, right? Because you have lower trade barriers. I think the concern in agricultural products, that's more on imports, right? Is seen as a possible disadvantage to the local agricultural industry. But some studies have shown that the impact could be limited, given that I think less than 2% of total agricultural tariff lines are involved. And I think NEDA Chief Balisacan also said that the focus on the agri sector is an inherent and independent need, right? And that's that the problems in the industry have nothing to do with RCEP. So I think at the end of it all, for so long as we're reinforcing investments in that space, and we have RCEP there, the goal really is to improve the integration of producers and consumers in the total value chain of the sector.
Okay.
So I think in terms of your individual companies, right, you have the manufacturers, you have Monday, you have URC, you have Axelum there, and you're also seeing much more interest among conglomerates in the agri space. Metro Pacific announcing its foray into the coconuts business through its stake in Axelum, right? So I think given the visibility that we're seeing there now, should be better days ahead for the sector.
Okay, interesting that you mentioned that, because that was, of course, my next question. Give us an idea here of how big of a chunk of the pie of a huge conglomerate like MPIC is this agri-venture. Do you envision that many opportunities? You know, now they're looking at 1 billion pesos to build a facility. It started with Carmen's Best, which for them is, you know, a drop in the bucket. But how much potential is this, and how can we price that into the MPIC stock at this point?
I think the good thing here is that there's a lot more space to expand, in the sense that you have a sector that's pretty much fragmented, and having the technical expertise and, of course, the scale and the leverage to kind of reinforce your size in the space is a good thing, right? Having companies such as MPI moving into these spaces, even though right now it's a small chunk of their overall business, it's no secret that the agri space is something that has been for so long neglected in terms of investments, right? So maybe consolidating some companies in the space and providing your scale and your technical know-how to these industries could actually help further the growth there. So I think the good thing here is that you have companies that are looking for growth opportunities that are aligned with what the population needs. And at this point in time, it's really looking like agri is a bigger story this time around.
Okay, still on the MPIC stock, there was, at least at the earlier part of the year, you can see this major jump. And some analysts are saying that was on the back of rumors of delisting possibly. Would that fare well for the stock should they be delisting? There seems to be a lot going on when it comes to MPIC, at least in the first part of the year.
Well, if they're intent to do that, well, I think one concern here is that MPI has been trading at valuations that are much lower than book, right? So, much lower than the perceived value in terms of what it holds. So that also limits their ability to raise capital, in the sense that if you want to place out, for example, you're going to be selling shares at much lower prices than what you should be fairly valued at. So taking it private improves the access to raising capital, in the sense that you could potentially price your shares at much closer to where you think or where your computations are at. So I think that in itself could bode well for other ventures that it has. And again, tying it back to the agri story that they're getting into, could also improve their ability to raise capital for those ventures.
Okay, and of course, they did just acquire part of Axelum, which also had an impact on that stock. They did also mention they're looking into other acquisitions. Anything that you're eyeing in particular, or possibly related to these kinds of acquisitions, especially with the RCEP ratification, that the agri space is now in the spotlight?
Well, I think there are still some listed companies that, I'm not saying that they're eyeing those listed ones, right? But there's still some in the livestock space that are listed, so that might be somewhere for them to look at. In terms of your other farms, then there are a lot of private ones there. Okay. So really, there's a lot that they could look into, since it is a fragmented industry, and hopefully having the scale there would improve productivity as well. So enhancing food security for us, and hopefully down the line leading us to export these food items.
All right, Restine, it's still earnings season, of course, and we just got the Ayala land earnings. I'll just pull out the chart for you to have a look, but basically beating estimates, no? So they not only had 14% of home reservation sales up, 14% up foot traffic in the fourth quarter, more than pre-COVID levels already, and even the occupancy rate at offices, 88%. Already, no? So net income up 52%. Tell us more about these earnings, if this is something, just because of the reopening of the economy last year, particularly in the fourth quarter of the year, low base year, or is this something because their capex is going to be higher as well this year? Is that something that's going to be sustainable this time around, this year, even as inflation is biting us?
Well, I think with their results, right, really great results. You have the strength in the leasing business offsetting the partial weakness in the residential space, right? But I think the great takeaway from their results is that they're actually seeing that recovery in demand that's leading them to ramp up launches for this year. I think they're moving that up by around 20% to 110 billion pesos worth of project launches in residential.
Yes.
And they're also seeing more vertical launches this year. So the vertical space really has been quite soft because of your sales cancellations. And them seeing that level off kind of gives us the idea that there's demand that they're seeing, that they're trying to capitalize on. I mean, even if at this point, interest rates and inflation is kind of still high, directionally, we're all expecting that should go down heading into next year, right? So if you're looking at opportunities 3-4 years down the line when you turn over, then the right time to be launching those projects would be now, right? In terms of occupancy rates, I think they're trying to get it back to the pre-pandemic levels of around mid-90s. So having those pockets of slowly easing that up through the year is a good sign, right? Of course, incremental revenues, and there are also new spaces that they're opening up or offices that they're finishing. And apart from offices, you also have that recovery in malls, right? That really has been the weaker bit of the business in 2020, 2021. So I think it's sustainable, the leasing bit. Of course, hopefully we don't run into any more problems with the pandemic, but that should continue to underpin the strength of their business. And the good thing with leasing is that it also gives them cash flow, right? To fund all of the capex requirements that they need. So having a strong leasing arm really does that for you. So I think better days ahead. Hopefully that also means for the rest of the sector. But seeing the two results from SM Prime and Ali, looks like we could have a stronger print for bottom line this year.
That would be leading to my last question, no? Because you already said it. It's not just Ayala Land. I was going to ask, is this specific to Ayala Land? That for whatever reason, people are still buying homes, people are still renting from them? Or is this sector specific, that the whole property space is seen to be rebounding or continuing that uptrend this year, despite the fact that the BSP has raised rates, touting higher rates? We're afraid that the residential space might get eaten up because of the high rates.
Well, I think there's resiliency still with our consumers. If just tying it back to other results, BPI mentioned that takeouts for mortgages actually improved through the tail end of last year. So you're really seeing that strength still in your consumers, and I think that's partly driven by your normalized economic activity. So having employment kind of stable is helping support that. So I think you also have your property consultants saying that they're seeing a recovery, right? In terms of rental rates, potentially some bottoming out this year, possibly growing a little bit through the end of the year. That's good for office. For malls, I think the story is built in and baked in that we're really seeing that foot traffic, right? Even in our experience with malls right now. So I think the real concern right now is, of course, construction costs. They're a little elevated, but these property companies have been kind of passing that on to higher prices. So if you're still seeing that resiliency in demand, then I think that's really more of an industry story. It's not a quick bounce back, right? But I think it's still better to make some progress than staying where you were a year ago.
Very interesting. And also, for our viewers here, 22% of the reservation or home sales are from OFW. So may pera pa rin yung mga tao. Very interesting there. Thank you so much for those updates, Restine Mercado, Head of Research of China Bank Securities.
Thank you for having me. Have a great day.
And for more updates, visit News 5, the Philippine Star, and Business World Online, or visit our website, onenews.ph. For more in-depth analysis, you can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com. And stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.